Hello everyone, my name is Andy. Today is Sunday, October 8th. Time is around 11 GMT, and we will have a look at the DAX futures on the Wanda platform. So it's Sunday, markets are closed, but we will have a look at a higher time frame, and we will also prepare the lower time frame for Monday, October 9th. So here we are looking at the weekly chart, and my take on the DAX is that we made a wave one up here, 5 waves, 1, 2, 3, 4, 5. We end with divergence, 5 waves. Looks like this was in wave one in the higher degree. Then we came down as an A, B, C structure. We reached the zero point 0.5 FIB retracement. So we know that if we have our wave one here, wave 2 should go into the area between the zero point 0.5 and the 0.854 FIB retracement. We touched the 0.5 FIB retracement, and from here we went back up. So I think we are now working on a wave 3 here in the higher degree, and this wave 3 is also an impulse, so we should go that as 5 waves. And I believe we finished here a wave 1 to the upside, and we are now in a corrective move to make a wave 2. And so this wave 2 is supposed to go here into this area between the 0.5 and the 0.854 FIB retracement. So although we are now in a correction, I'm quite bullish on the DAX, or this scenario in green is quite bullish. It would mean more upside as a wave 3. That would be then the next move after the wave 2 is in. Now, it could also be an alternative scenario here in the weekly would be that this wave 2 here is not in yet, and then this is clearly a bearish scenario. Then what we would have is an so here the wave 1, but then an expanded flat structure as a correction. Then we have here in 3 waves, or wave A, 1, 2, 3, wave A, then a wave B up here, overshooting wave B, and then we can come down in 5 waves as wave C, 1, 2, 3, 4, 5, deeper into this area, and then this here would be our wave 2 instead of this point here in price and time. So that would be the alternative. For the moment, this scenario is not really on my radar, because current price action is situated here. The low was here, so there is quite some separation here. But we have to acknowledge, for the moment, we are in a bearish cycle in the weekly. So we also have to take into account bearish scenarios from here. And so maybe now I can elaborate a bit on this bearish scenarios, and therefore we go to the daily. So here in the daily, this is our wave 2 low here in the higher degree, and this here is the wave 1 up. So now that we are in a bearish cycle in the weekly, it could mean that we see further downside, of course. So the first possibility was, or the first possibility is, the very bearish scenario in the weekly. So that would mean that we have a drop here as a wave C, as an impulsive wave C. For the moment, it does not really look like this, but of course, it can still evolve towards an impulse. For the moment, this looks corrective here, I would say, and not really impulsive. And also the start here of this wave looks more like 3 waves instead of 5 waves. So I will not really elaborate on this very bearish scenario, a drop as a wave C, as it seems a bit unlikely for now. So then what else could happen is that the correction is actually in right here, as shown on in green. Then it means we have the wave 1 here, WXY correction. We reached the wave Y area, this area in green, and that would mean that we have a shallow wave 2. So that's also a possibility that we do not reach this area here. So normally we are supposed to go here to the 0.5 FIP retracement, but sometimes it happens that the wave 2 are that wave 2s are shallow and that we do not reach this 0.5 FIP retracement. And then another possibility would be that we get another corrective leg here. So the WXY you are seeing here, that this is only the first part of a correction. What should happen then is, so WXY, then this would be the wave W, so only the first leg of the correction. Then we should go up in 3 waves as a wave X into this area here. So if we take the length of the wave W, then here this area between the 0.5 and the 0.854 FIP retracement is our target for the wave X. We should go there in 3 waves, 1, 2, 3 into this area, and then we come again down as another 3 waves, 1, 2, 3 as a wave Y here into this area. And then our wave 2 could be in. So instead of the shallow wave 2, then we have the mature wave 2, I would say, into the area between the 0.5 and the 0.854 FIP retracement. And then a final possibility is that this one extends deeper as a wave C down here. So the WXY, the Y leg, consists of an A, B, C, and then this C wave here is an extended wave, and we go deeper into this area and close to the 0.5 FIP retracement level. So these are actually 4 bearish scenarios, from very extreme, taking out this low here, to getting into this area, or even a scenario here indicated in green, that the low is in right here and that we only have a shallow wave 2. So now we have to look on the lower time frame. What is the most likely one? So for now, I would simply exclude the wave or the impulsive wave C down, taking out this low, because we simply do not have the data yet to support this scenario. And also, here the double correction as a WXY is for the moment not very relevant, because for this scenario we first have to reach this area right here, and then we can start to analyze the WXY scenario. So for now, I believe 2 scenarios are left that we should consider on the lower time frame. That is the scenario that the low is in right here, and the scenario where we extend deeper as a wave C. And therefore we go to the 4 hour. Both scenarios are shown right here. So first of all, here in green, you can see the scenario where the low is in. Then it would look like a WXY structure. As I said earlier, we nicely reached the wave Y area. If we take the length of the wave W, the length of the wave X, then we reached here this area between the 1 and the 1.618 FIP extension and reaction here from the equal leg. Then it means that yeah, here this final Y leg turned out as an A, B, C down. The C wave also nicely 5 waves, 1, 2, 3, 4, 5, and we are ending with divergence. So this is like potentially the low. Like we cannot have like a marginal new low or something. No, I think if we break this low, it is really for more downside. And then we come here into the scenario with the extended wave C, I would say. And then it looks like we are still doing the A, B, C down, but instead of the wave C being in here, we have an extended wave C, and then the distribution of this wave C could look like a wave 1 down, wave 2 up here. And so this here is then a 1-2 setup, followed by another 1-2 setup, and then wave 3 of 3 that first should go into this area, followed by a wave 4 and a wave 5. And so then this area, the target here, or this area, becomes our target, and we can calculate it by doing this, taking the length of the wave 1, taking the length of the wave 2, and then here we have the area between the 1 and the 1.618 FIB extension, and then this here would be the wave 3 target area of the wave C. So as you can see, like a marginal new low is not really on my radar. If we take out this low, I believe it's for way more downside, impulsive downside as a wave 3, then followed by a corrective move as a wave 4, but then still a wave 5 has to come, and so this brings us really into the wave 2 area. So now on the lower time frame, this is a bit the key decision point, it looks like. So the good thing is that the good thing for the bullish scenario, being the low in here, is that it looks like we are forming here an upward cycle here in the 4 hour. And so if the cycle here, the downward cycle, would also break here in the daily, that would be a good indication that we are actually preparing for a new impulsive move up, that this was our corrective move. So this is what we should look at in the lower time frame next week. Here, will this low hold or not? If we look at the 1 hour, still both scenarios are possible, bearish as well, bullish. Like I said in earlier videos, for the bearish scenario, this could be our wave 1 down, and now we are in wave 2 area, and this wave 2 can be followed by a wave 3 down. So this wave 2 area we find by taking the length of the wave 1, and here this area between the 0.5 and the 0.854 FIB retracement is the wave 2 area. So far we only have 3 swings, like I would count this as 1, 2, and now 3. So this can still be corrective as an A, B, C, then it is a wave 2. However, if we see that a 4th and a 5th swing are coming, then we can count this as an impulse, and then this would be a good indication this would be a good indication that the bullish scenario will play out. What else needs to happen? Ideally, we also break here this high, because then the lower low and the lower high sequence is broken, and of course, more fundamentally, the retest here of the low. So if we have our wave 1, we should go down again as a wave 2, and then this wave 2 really needs to hold, like this low needs to hold in the wave 2 retest. If we do not hold, then it is then we are in the bearish scenario. So we are on our way to more clarity, I think. So this is something here to really monitor on the lower time frame. How will this play out as 3 waves, as 5 waves? 5 waves is a good indication for the bullish scenario. 3 waves is is a good indication for the bearish scenario, which would mean that we take out this low. And I believe on the 15-minute there is not much more to add. Here I indeed just labeled what I just explained, like this move from here can still be both, can be bearish as well as bullish. So for now we have 3 swings, 1, 2, 3, A, B, C in the bearish case. In the bullish case, 1, 2, 3, and a 4 and a 5 should follow to finish a first impulse up. That's the first indication of a new wave up in the higher degree. But then, secondly, more importantly, the retest here as a wave 2 should hold this low right here. Okay, that's my analysis, higher time frame analysis and the lower time frame analysis for Monday, October 9th. If you enjoyed it, please like, subscribe, comment to support my work. And I see you back for an other video of the lower time frame on Tuesday. Have a nice day. Bye-bye.